Okay, so in this video, we are going to talk about advanced market structure. Advanced market structure is actually quite important. This is one of the things that made me master the market in of itself. It was the understanding that market structure goes beyond just, hey, it's external and internal. And there's one word that I'm going to use that everyone dislikes, especially the people that trade futures, which is market structure and order flow. For me are very, very similar. But you know what? No, actually, I'll just be using market structure because I want you to understand that market structure goes beyond internal and external. Market structure, as you can see, is multiple fold because as the market is moving to the upside, you will see bullish market structure, but that does not mean that you do not have pullbacks in between. Which means maybe the 1 minute was bearish right there. The 1 minute was definitely bearish here, right? So it's important to understand that there's multiple types of market structure. And that's what we are going to talk about. This is going to be a little bit more advanced, so make sure that you have checked the previous video out. But market structure, it can be divided into external and internal market structure. And then you need to ask yourself within all of the time frames whether the structure is bullish or if the structure is bearish. So with that being said, we always need to ask ourselves, is external market structure bullish or bearish? Is internal market structure bullish or bearish? And then you ask yourself in different time frames. And those time frames are going to be the daily. So let's make this bigger. You're going to ask yourself this on the daily, the 4 hour, the 1 hour, and the 15 minute, right? These are the ones in which you are going to ask yourself, okay, what is the direction of the market? So if we go onto the charts, because this one, I can give you as much thesis as you want, you will only see this in the market. Now, when we see this market structure, I will tell you where we are going to focus on right now. We are going to focus on this right here. Right here, what market structure do you see? A lot of you would say, well, I see bullish market structure, and you would be correct because the market structure is overall bullish. But let me ask you, would you just profit when you were taking the longs, or could you also profit when the market was trading short? And if you could have profited when the market was short, when was that? It was during this time right here. During this, you probably couldn't profit right there. But overall, external market structure is bullish, but this is the exact same as we see right here. Bullish market structure followed by internal bearish market structure, followed by internal bullish market structure once we switch right here, and then this is where the high probability longs come up, which is right here, which is right here, right? These were the high probability longs. So what we can see is external bullish market structure followed by internal bearish market structure. So during this time you could have shorted, but there's a big but, which is you have to understand that these internal order flows or market structures are very, very short-handed, which means, yes, they might result in the reversal. Okay, we had the sweep of the high. Now we might have this reversal. But as soon as the market moves bullish, you have to stop looking for more shorts. Why? Because now the internal and the external market structure are aligned. Therefore, that's extremely high probability of the market moving to the upside. So for example, right here, I had this where the more order flow in line slash the more market structure, let me actually change this to market structure, is in line, the higher the probability. Highest probability is when the internal and external market structure are in line. And when is that? Well, move to the upside, this is high probability. Once we start moving lower, okay, this becomes low probability longs and acceptable probability shorts. As soon as we move higher, okay, all of the shorts are extremely low probability, all of the longs are extremely high probability, right? But let's quickly go onto the 4 hour because it's going to be easier to see because there's more price action, right? So on the 4 hour, let's think about external market structure starting right here. We have the move to the upside, move to the downside. External market structure is going to be right here, okay? Move higher, move lower, move higher, move lower. Well, you can consider this external if you want. And then once the market starts to move higher, so we have move lower, move higher, move lower. So technically, this is now an order block. As soon as this gets flipped, the market structure is now bullish. You execute on the longs, right? So when was it high probability? When did the momentum bullish actually came? After we closed above this order block. So once we closed above, you can see how quick we went towards the highs. Next, we have move higher, move lower. Instead of trying to call this high, wait for the market to confirm and notice how quick we went then towards the highs. Then move lower, move higher, move lower. So this is internal bearish. Then once we turn bullish, notice where we turn bullish. Right there, after we shift right there, and then boom, in one candle, we reach the target. Now, lower, higher, lower. Notice how right now, bearish PD arrays are being respected. Gets respected, continues moving lower. Gets respected, continues moving lower. Gets respected, continues moving lower. So would at this point any longs be high probability? No, because even though the external market structure on the daily is bullish, the internal market structure on the 4-hour, which is a very high time frame, is bearish. Therefore, you want to wait at least until the 4-hour and the daily are aligned. And yes, you're not going to catch the low, right? But let me tell you, you know who lost the most in this range? Was everyone that was trying to long a market that had no movement towards the upside. So right here inside, right here when I was talking about my trading through here, it was only shorts. And then as soon as we moved up, I remember exactly that this was the defining movement to the upside that made me think, okay, we are back to bullish, so let's long. And then eventually notice how market shift, close above, boom, impressive move to the upside, right? Then move lower. Move lower. This fair value gap gets disrespected. So the 50% of this fair value gap gets disrespected right there. And then we just move to the upside, right? Same thing here. Moves higher, moves lower. Then in this one, it was actually in one candle that we moved. And then probably if we go into the 1-hour, we will see the exact same thing. So what would you do? Well, if you only want to trade high probability setups such as internal and external structure in line, you're like, okay, I'm bullish. Now I don't trade. Now I trade again. That's how you approach it, because you're constantly waiting for a higher probability setups for the market structure to align. So what you always need to ask yourself is, what is the market structure of let's say the daily, the 4-hour, the 1-hour, and the 15-minute. So in this case, let's go back. So in this case, what is the structure overall? It's bullish, right? Let's first only talk about the two ones that we saw, right? It's bullish. Bullish. But if you go into the 4-hour, you basically would not be trading while the 4-hour is bearish. So if you do this smaller and zoom in, so you would not be trading while the 4-hour is bearish, which is right here. So right here, the 4-hour is bearish. Bearish when red. And then once the market finally switched bullish, which was right here, this is when the market actually moved in our direction, right? So where is, let's add this in green. Where are the higher probability setups? The higher probability setups are when both market structures are in line. Now, if you want to increase the number of trades that you take, then you can look at the market structure on the 4-hour. You can ask yourself, okay, what is the internal and external market structure on the 4-hour? And then you trade in line with that. always keeping in mind that the external market structure on the daily is the one that is going to take it, that's going to give you the highest probability entry. So notice, now on the bearish front, we have bearish market structure, bearish market structure, bearish. This is now the external market structure because we have the pullback. Up here, what would you say? Well, internally we are bullish, but as soon as we turn back to bearish, I'm only bearish. And this is going to help you so much on the daily bias. It's absolutely insane. And then the market starts moving to the downside, moves. Okay, external market structure is now right here. Now we're starting to form a little bit of bullish market structure, right? Move higher, move lower, move higher. So this is a bullish order block. What would you wait for? You would wait for the market to move lower. So now, let's go zoom in. External market structure right here is in line with internal market structure that has now switched bearish, right? So this is where the highest probability setups are going to come. The highest probability setups happen when internal and external market structure align. So you would be like, okay, we are short-term bullish, but as soon as we turn back to bearish, okay, we're bearish, let's go to the downside. Why? Why do I say that this is so important? Because so many traders would look at this and be like, no, this is the low, 100%. That's what happened right here. Right here on EU, people thought, oh, okay, the market is going to start moving to the upside, therefore I'm just going to long. And then the market tanked, right? So we have right here, this where we're at right now, where we even opened up with a huge gap. So let's look at another pair. Same thing applies all the time. Bullish market structure, internally bearish, back to bullish, so just bullish, right? So let's do this together. When is structure bearish? Well, I want you to look at the charts right now as I'm looking for the rectangle, and I want you to tell me, where do you think that the market was bearish here? Like short-term bearish, which means internal order flow / market structure bearish. Well, we have this. Let's put this in red. We have this, right? This is internal market structure. And when was the internal market structure in line with the external market structure? I'm going to do that in green. Look, we have the market shift, right? So you always wait for the market shift. You have the market shift right here. And then from here on out, the market is both in line, external and internal market structure are in line. Next one, right here, as soon as we close above, the market is only bullish, right? And then when do we become internally bearish? When we have this market shift right here, right? So then when does the structure align? Again, right there. So question, am I giving you the formula to call the lows? No. Why? Because I know that everyone that calls the lows is actually an unprofitable trader. They just do not show you the unprofitable trades. All of the times that they tried to long this and they were wrong, right? So I wait for the confirmation and then I trade in line. Because notice how, if you just wait, all of those other days are bullish. Imagine you just longed all the time right here. If you just long, it's so easy to make money. Same thing here. If you just long, it's so easy to make money. You would have been wrong 1 out of, how many days is this? From the 3rd, in 2 weeks. 2 weeks, you would have been wrong 1 day. Right here in also 2 weeks, around 2 weeks, you would be wrong 2 days, right? Let's even say that this one you would have been wrong and this one you would have been wrong. Still extremely impressive. Right? And then when do we turn internally bearish, right? We turn internally bearish once the market moves up. It finds a high, it retraces, but it's not only retracing. It's then moving up a little bit and not being able to break this high. Because once we break lower, now we have created an internal order block that is against the external structure that we have right here. So the market usually reacts to this order block, Again, until when? Until this most recent order block gives us the market shift, and then there you go. External structure right here and internal structure are now in line, and this is when the high probability setups actually do come. This is where if you just execute and you execute in line with the external market structure and internal market structure, you will see high degrees of profitability. So you can see how you just wait, right? Then right here, moves higher, moves lower, moves higher, moves lower. This is now internal market structure. Why? Because this is a bearish order block. Then you would have been internally bearish right here until we switch bullish right there. So bearish, then bullish, then back to bearish. So all of these days you would have been bearish. Then internally bullish, which means you're not really trading when you don't need to trade when the internal structure and external structure do not align. Those are the lowest probability days, to be honest. And then notice once again, move lower. So external structure is bearish right here. And then we have move higher, move lower, move higher. Market shift. Now you're just bearish again. So let's copy this, put it here. You're just bearish again, and you can see how we completely break through the targets, right? So that is internal and external market structure. This is one of the most important concepts for you to understand, because if you are able to do this, you will understand that, okay, once I have multiple market structures aligned, you will have extremely high probability trades. Because listen, imagine there is going to be a point in which the daily is going to be bullish, bull. The 4 hour is going to be bullish. The daily is going to be bullish. But the 15-minute is doing something like this. Let's do this. But the 15-minute is going to be doing something like this. What is our entry model going to be? And you'll notice that this pieces together so well when we actually when I break down the entry model. Because the entry model is going to be, okay, wait for a higher time frame PD array, which means a 4 hour or a 1 hour or even a daily PD array to get hit, followed by the market shift on the 15-minute or on lower time frames, and then you execute in line with what? With all of these order flows. Right? So that is basically it. That is advanced market structure. This is one of the most important concepts. This is one of the biggest reasons as to why I call the market so well and I'm so confident with my strategy, is because I know that I simply understand market structure. And if you are able to be patient while internal and external market structure are not in line, and you are more aggressive when the external and internal market structure are aligned, then you will be highly profitable. So with that being said, I hope you enjoyed, and I'll see you in the next one. Peace.